Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today I've got a special guest, CEO and co-founder of Pine, Justin Herlick. Pine is all about transforming the outdated and complicated home financing process and creating a simpler, faster, and better experience. How, you may ask? With innovative technology and talented, understanding people. Welcome to the podcast, Justin.
Thank you for having me.
You know, there's been quite some time that I've been in the mortgage industry, the finance industry, indirectly in Canada, at least, or in Ontario, for quite some time, and I've seen that, like, you know what, we've never really had, I would say, truly, you could say, tech guys in the industry, and I felt like tech and finance, because it's like two subject matter experts that you need to really come in to develop something that's really unique. And as I was going through your kind of history, I was like, you know what, you have both, and you truly have something that's not something that I see everywhere, where it's like you've worked at Blend, which is you're part of their success, which is pretty huge in the States. For my listeners who are only Canadians, it was a fintech down in the States, and then now more recently you started Pine. So could you kind of go through your entire kind of history and how you got to Pine for our listeners, how you decided into mortgages, and how you decided to kind of marriage the technology with the financial stuff?
Yeah, for sure. And that's a pretty good place to start. So my background, I grew up here in Toronto. I actually originally started studying finance. So I studied finance at Queen's and was really kind of gearing up for a long-term career in finance. So I worked at RBC Capital Markets on their trading floor, actually in interest rate products, which is, funny because what I do now. But after that experience, for me, it wasn't quite exactly what I was looking for out of my career. So I kind of went in a different direction and became a software engineer and moved to Silicon Valley. So I did that about, over 5 years ago now. And as a software engineer in Silicon Valley, I really had the great opportunity to be involved in tech of kind of all different sectors. But eventually I ended up at Blend, where I joined their partnerships team. And Blend is a really leading fintech in the United States that provides a mortgage point of sale to the largest banks in the US and non-bank lenders as well. So they work with companies like Wells Fargo, US Bank, Navy Federal Credit Union. And what they do is they allow any one of these traditional lenders to offer an entirely online experience. And while I was there, it was really cool because a lot of startups in the Bay Area, well, sometimes they go really well and sometimes they don't. But fortunately, Blend took off. And when I was there, they might have had like 6 customers, and now they have over 300. They're a huge company. They're publicly listed, and they really transformed the U.S. mortgage industry. So I got to see that firsthand and be at the forefront of it in the U.S. But while I was at Blend, I had the unique opportunity to try to take their product offering and expand it to the Canadian market. So I was somewhat of a general manager in a sense. And we took this platform that was working really well in the US, was processing, I think, 5 billion plus of mortgages every day in applications. And we tried to bring it to the Canadian ecosystem. And while we did have success and we did find one of the major lenders in Canada to work with us, the feedback we got from the banks was not Unfortunately, the same feedback that we got in the US. In the US, the banks were on board. They said, we need to stay competitive. We need to do this. But in Canada, the biggest lenders, they said, well, there hasn't really been our inflection point in the industry. This doesn't seem like the right time for us to invest in technology like this. For now, we're going to put this on pause. And to me, that was really a wake-up call saying, as a Canadian living in the US, I had all these different amazing financial services products available to me, whether offered by startups or traditional companies or companies like, PayPal has Venmo, which is like a peer-to-peer payment system that works really well in the US. We're still using e-transfers. So I was like, there has to be an opportunity in the Canadian market to provide something new, to provide an entirely new experience rather than trying to, work by licensing software to an incumbent. Why don't I just give consumers what they want, which is an extremely convenient online mortgage experience, and really build a company from the ground up. So that was the inspiration behind Pine. We started the company in May 2021, and it's been a great journey so far.
Yeah, I mean, I would definitely agree that, and you didn't say this directly, but I'll say it, that the Canadian market for financial services is definitely underserved. I mean, it's insane. It feels like, I know that, because I have family down in the States, and they'll be like, you know what, when we refinance our student loans, and this is not like anything, I would assume student loans is a bit more risky because it's unsecured. They're like, we could do it all through our phone, right? I don't have to go speak to anybody. There's none of that stuff. Everything is kind of done through the phone. Over here, we don't have anything like that. It's just insane. So, and the fact, I think it kind of boils down to the fact that we've got a few big banks, and those banks until recently wouldn't even let QuickBooks get the transactions, so that for accounting purposes, forget about any kind of integrations or anything, right? So whereas in the States, the market's just so much more competitive, and people just have better and crazier ideas. Not crazy in the sense bad, but stuff that's kind of you're reaching, and when you reach, sometimes you get there, right? And so it's something that I felt like, you know what, it's a huge change. But I want to step back for a little bit and kind of really revisit a few things that you said earlier. So you said you're in finance, and then you moved into tech. And my question is, and the reason I'm going back, because this is really bugging me, because I got to ask. So I went to business school in undergrad. I've had, anybody in undergrad would kill to get a finance job. If you're working in any kind of meaningful finance, you'd do anything. You'd give your right arm away to be like, all right, let me just get an opportunity. So, and I can only imagine how difficult it was for you to kind of get into those positions. So what was the impetus to be like, okay, you know what, I've worked so hard to get here. Now I want to kind of stop this and almost do a career, almost start again in a sense. Not really, but in a sense, you're starting again with the computer engineering side. What was going on through your mind to be like, okay, you know what, I want to move over?
It was really a number of things. I think that people are the most successful in jobs that they like and that they can see themselves in a long term. And after my I think it was an 18-week experience on the trading floor, I realized that even if I could get into this industry, which I did have the tremendous opportunity, and they told me some stat, but they're like, do you know how many thousands of dollars it costs just to put you in this seat because of all the technology, all the trading platforms that we're providing to you? We totally, we this is absolutely net negative to the bank. This is like an opportunity that we give to you as a junior trader, and but really, what I realized was it wasn't for me. Like the hours were I'm an overnight person, and trading's really early morning hours. Kind of just the whole. I like vibrancy and I like things that move really quickly, but it was a different type of speed on the trading floor. You don't really have these long-term projects that you work on and you see success. Everything's very, very short-term focused, like short-term profits, short-term trading. So for me, that didn't vibe with me. But I realized because I was actually building a lot of models. So I started to program and started to write code while on the floor. And I was like, hey, look, I'm actually kind of good at this. I actually like this. If I spend a little bit more time, I could get up to speed. So it was really, that was kind of like a bridge in a sense, because I spent all this time building models. Actually, what's really funny is the model that I built was an interest rate interpolator. So in Canada, this is really specific, but in Canada, there's certain interest rate benchmarks that we don't have. The US has more financial, digital financial products. So there's certain benchmark rates that aren't calculated by the Bank of Canada. So I was calculating these off bond yields. So I was writing all this code and I was like, oh, you know what? I could do this full time. And being a software engineer in today's environment is a great career. It's very mentally challenging, but you get great perks, you're paid really well, and it's creative work. So I was really excited to make that change. And, it was a moment of realization, a moment of waking up, realizing that if I stayed in that, I would not be long-term successful.
Yeah, it's you're speaking like Peter Thiel in a way, because Peter Thiel, like he went into big law, and then he's like, you know what, I don't want to do this anymore. He left to start, I think at the time it was X Payments or whatever it was, what is now PayPal. But he's like, everybody on the outside was trying to get in, but everybody on the inside was trying to get out.
Yeah, yeah. And Peter Thiel is actually one of Blend's early supporters. So,
Oh wow,
yeah.
Yeah, I mean, he is I feel like I may not necessarily agree with all of his like political views or whatever, but his mind is like, the way it operates is at a whole different level. So he's planning like 30 steps out. So I love to hear him talk. So I love listening to his lectures and all of that. He's like working at a very different level, and he kind of, it's not just and I'm sorry, like kind of going on a sidetrack here a little bit, but he's one of those guys who I feel like is not just looking at a specific company, but the economy as a whole and where that's going to be in 10, 20 years. And I think for leaders, that's so important to do. And I feel like bringing this back to Pine, this is one of the things that you guys are doing. So how did you start Pine? And can you kind of run down how you kind of got your team together and what it was to go from working for a company, right? Which I find like you could be a manager at a company and you could be really high up, but you're still not like the CEO, to kind of moving to a company where now you have like a good head count underneath you that you're leading, and that you're kind of responsible. So run us through what it's like, what the beginning kind of story was to start Pine, and then kind of I would like to kind of have a good understanding of your kind of leader transformation that kind of got you into that the CEO role.
Yeah, for sure. So I worked in the United States temporarily for about 5 years, and I was working at a startup called Instabase. And this was right when COVID, was really shutting down office space, was shutting down the economy. And to me, it was like, hey, I think this is a good signal for me personally to take my step back and to come home to Canada. Because California is great. There's very, I think, obvious benefits of living in California. But for me, it was like, hey, I was always going to come home. This was always a temporary thing to get work experience, working in kind of like Silicon Valley. And I thought I was going to wait a few more years, but COVID really pushed me to come back. So when I came back, I was like, I started off by working remotely for that company. Like they kept me there. Obviously, everyone was remote at this time, and we were a pretty global company. But to me, it was like, I'm here, I'm back in Canada. There's this opportunity that I've always seen as like totally ripe. There needs to be a new mortgage entrant. Canada has not seen its moment yet with new entrants, and if no one else is going to do it, I'm going to do it. So I approached one of the senior engineers, one of the engineering leads on my team, and I said, hey, Jonathan, that's my co-founder. Do you want to start this company in Canada with me? And to my shock, because this guy had been a career like only working at software type of companies, I was like, yeah, I'm totally excited. Let's do it. Let's start a mortgage lender in Canada. So we started the company, like I said, April or May 2021. And from there, we're in over our head. This is going to be a big journey ahead of us. We cannot do this on our own. We need to get some money behind us. So fortunately, we had built up a really strong reputation in the Bay Area with really prominent investors. So Greylock, who was one of the earliest investors in Facebook, one of the earliest investors in LinkedIn, Figma, which just sold to Adobe yesterday for like $20 billion. They were one of the earliest rounds there. We had built a strong relationship with them, both Jonathan and myself. So when we did our seed round, it was the pretty obvious choice to work with Greylock. So they put a substantial amount of money behind our seed round. And from there, we knew that we had kind of the runway to at least get to the next milestone. The amount of money was not nearly enough to actually create a mortgage company, but it was enough to prove that we can kind of get the gears going. So we set up shop in Toronto. We started hiring people. The team's up to about 25, 26 people now, so it's pretty great. Yeah. And from there, we knew like, hey, there's a huge list of things we have to do, but it all centers around how can we provide consumers with the best possible experience. And everything we do on the back end, every partnership we build, every feature we build with our engineering team is focused around that core thing. Is we want to be convenient and we want to be as customer focused as possible. So always give that power back to the customer.
Because it's kind of like what Warren Buffett says: you got to wake up every day and figure out how to delight your customers.
100%. And mortgage is such an interesting industry in that standpoint because unlike maybe, investment management where you're signing up for a robo-advisor, where once you kind of sign up, you're not totally stuck, but you're more or less, you're not going to move unless something's about 10 times better, they say. With mortgage though, people wake up every day and they say, hey, I need to get a mortgage today and I need to get one from someone. Who am I going to get it from? So there's not as much of this lock-in. Like the companies and the lenders that have the highest market share, there's nothing structurally that gives them that market share other than their reputation and their brand, right? But there's no lock-in, unlike deposit accounts or investment accounts where you are kind of locked in for a little bit. So it is an industry where every day you got to show up and every day you got to give your customers your best. Otherwise, you're going to lose your rep and you're going to lose your edge. So that's kind of a philosophy we live by.
No, I know 5-10 years ago, I was talking to brokers at the time, so mortgage brokers, and they're like, the banks, they have a monopoly over the industry. And I'm thinking, well, they have a monopoly over the industry because you let them have a monopoly over the industry, right? If you're not giving them a good, why wouldn't I, as a Canadian, right? And I'm not hating on banks. I love banks, work with banks. But my thing is, as an individual, as a Canadian who wants to take out a mortgage for my house, why would I necessarily go to a bank where they're only going to have one product, which is that banks, as opposed to a mortgage broker, which it seems like it's common sense, right? You've got 100 different lenders. Depending on how big the mortgage brokerage is, you might have access to certain banks that are not in the market. You may also you're working off of the reputation. So if Pine is submitting a application on my behalf, it's not just Harris. He's a great guy. It's also Harris, and then there's Pine because Pine has vetted Harris, and both of the reputations go in together. So it's not like you're starting a reputation from nowhere, which is what I felt like. I was like, there wasn't enough innovation in the industry. But again, I find, and correct me if I'm wrong, in a lot of ways, to start a startup in Canada within the financial industry is also more difficult than it is in the States because there's consumer habits, right? There's also regulatory thing that we're highly regulated, but consumer habits are still when you see a green couch, when you see a lion, you're going to think immediately a certain bank. And we're kind of more used to, okay, well, why don't I just go there? Because that value proposition hasn't been in front of us for that long. Is that right? Would you agree or would you disagree?
No, I agree 100%. And the reasons are multifaceted. So first of all, there are consumer behaviors that are significantly different in my experience living in both countries. Yeah. People they trust their banks a lot more here, which is good. We should trust our banks. Our banks are the strongest financial institutions in the world. And I think that's been shown through many economic cycles. But they're less willing to explore alternatives, which means it's harder for startups, right? How do you get your name out there when you're competing against these giants? And people say, I've even heard this in my experience, is, oh, you might be offering me a better rate, but I feel more comfortable going to the bank. And that blows my mind, right? Because I'm not asking you to give me anything as a mortgage lender. You can read our terms of service, you can read our charge terms. They are identical to everyone else's. I'm giving you our money, so to get a loan. So it does surprise me when I hear that, but it does make sense. And the other reason it's much harder to create a startup is not necessarily the regulatory environment. There's less of an ecosystem. There's less of a digital ecosystem. So in the U.S., if you want to start a fintech, there's banking as a service. There's you can use all these different API technology and engineering tools that allow you to start companies really, really quickly. And there's a lot of infrastructure. So just something that's really relevant to mortgage, income verification. In the United States, there's a dozen plus startups where if you get consumers' consent, you can go and you can verify their income directly with their employer through a payment network. None of that exists in Canada. So everything's still paper driven here, and we're really trying to change that. We're trying to bring as much digital experience as possible. So rather than send us a PDF of your pay stub, we should be able to digitally connect to your pay provider and just say, hey, we verified your income is good to go. Don't worry about those, cumbersome PDFs. And then if I can just bring back to the brokers for a second, and Pine is a licensed mortgage brokerage, but our model is a little bit differently.
Yeah.
So we have our in-house lender, and that's really where we think we can provide the best possible experience because it's so tightly integrated with our experience and with our customer experience. Brokers, it's kind of interesting that people don't realize, how much commission they're making in a transaction. The model is not the most transparent, and really, I mean, if we get down to it, brokers make a commission based on the difference of the lowest possible rate they could have given you and then the rate that you end up getting, right? So there's a little bit of a bump there, obviously for their service, and their service is really valuable to a lot of customers. But to us, something that's different is the rate you get is the rate you're going to get. You don't come to Pine and say, oh, hey, I have this other rate. Can I get you down? We just give you the best thing that we can offer right out of the gate. There's no negotiating with us, which I think provides customers with a much easier experience and a far less stressful experience.
Yeah. And I would say, and I know the answer to this, but I want my listeners to know this. Are you guys truly digital? And when I say truly digital, and it sounds like there's an added explanation there, but because there's a lot of, I think, firms out there that are saying they're digital, but it's just like maybe a form online. And I don't consider that digital. Digital is, like you just said, you're integrated so that the application that the client puts in, you can push to a lender without, like people kind of transferring data from here and there and whatever it is, which I don't find to be digital, right? That is just a form online. So are you guys truly digital in the sense that you have systems that you're working on that will integrate the entire process?
So we are the most digital company out there, as far as I can tell. Our entire customer experience is digital. Our underwriting system has been integrated directly in. I'm pretty sure we're unique in that. But I actually would not say that's like a selling point of the company. I didn't come here to say like, great, you could do your mortgage online. For the vast majority of Canadians, and the vast majority of people, I'd say, around the world, this is a huge transaction. This is quite possibly the largest transaction they're ever going to do in their life financially. And they want advice. They want someone to talk to. So even though you can do every single step online and you could go all the way to closing with us completely digitally if you wanted to, nobody wants that. People do want to talk to someone. They want advice, and they want to say, hey, look, you have a fixed product, you have a variable product. What are the differences? What's the benefits of a shorter amortization versus a longer amortization? What does insured mean? What does uninsured mean? Right. So there's a lot of questions. Most people are not as familiar as in this industry as maybe we are. But we are all focused around providing consumers with that experience. But one thing I can tell you is people hate document collection. They hate, finding old forms that they've never looked at or getting employment verification. These things are all painful, especially when you can only do it between the time of like 9 and 4:30, right? So no branch visits with us. No need for paper documents with us. You can do everything on your time. You can provide your accreditations at 2 a.m. in the morning through our portal. So we are trying to give customer that experience. You can even text us, right? So my experience
sorry, not to cut you off, but what's your just a rundown, because you're kind of going through in the middle of it. What's the entire customer journey? Like, is it something that it's like, how do you kick the file off? If one of my listeners are looking for a mortgage, do they give you a call? Can they just start online? Like, how do they start off, and what's the entire journey to get that mortgage with Pine?
Yeah, so the vast majority of our customers start online. You go through our application. Once you go through that, our system will automatically do a rough sort and try to figure out what product you're in. So there's some really obvious rules. If you're looking at buying a property over $1 million, then that mortgage can't be insured. The rates are going to look a little different for that. So we do all that online automatically, and then you get assigned to a licensed mortgage advisor. And then mortgage advisor is going to be your point of contact throughout the experience. And as soon as you submit, based on your personal background, so if you are a standard employee, we're going to ask for your pay stub. But if you say, hey, I own my own business, we're going to ask for tax documents. Like, it's the standard underwriting things, but we do it all automatically. So at that point, you already know what needs to come next. So you know where you are in the process. Our underwriting team does look at files manually because there's a lot of things that happen. So we won't pull anyone's credit without their consent, of course. And we actually, even though we get the credit consent online, we always reach out to customers and say, hey, just moving forward, are you comfortable with this? Is this something you're serious about? Because people don't want to be, they don't want to be dinged if they're not really serious. They're just shopping, right? So whereas kind of, again, putting the power in their seat. And then once we get what we need, we'll give you your rate lock. We'll say, hey, this is the rate that we're committed to you for. and then we proceed to closing. And what we found is in today's environment, the mortgage cycle is really long, right? People are trying to get locked. They're trying to find their rate as early as possible because last a little bit now, rates have only been going up. So it's been very advantageous to lock as early as possible for a lot of people. Not every situation, obviously. So people will do that, they'll lock, and then when it comes to closing, we'll proceed through that. And we work with a number of service partners on the back end. So we do rely on their experience, but there's no branch visits. We go to their house, we do everything on their time, and we make it as convenient as possible to switch or to get a new mortgage with us.
Well, that's amazing. And for the viewers who are interested, I'm going to be putting Pine's information either on the side or on below, depending on where you're listening. I do want to change gears a little bit. I know that we've been talking a lot about Pine. I want to talk a little bit about the market, and the market's just been going crazy. I personally genuinely did not think that interest rates were going to be where they are today this quickly. It's always a possibility, right? But I just didn't think that they were going to be this aggressive, especially if you look at like the past 10, 15 years where, I mean, they've always talked about raising rates, but they never really have. So I felt like this was kind of crazy. On your end, I know you're in it more than I am. What would you, and I just, for the sake of time, I just want to kind of maybe pay attention more to first-time home buyers. And the reason I do that is because I feel the most for them, because you're saving more and everything's just getting more expensive. What do you think? Do you have any tips and tricks for first-time home buyers in this market trying to save up? What would you suggest to them in terms of how to approach getting into real estate? Do you say should they wait? Should they jump in now? Should they get in touch with Pine right away? Should they get in touch with Pine later on? Like, what's your advice to first-time home buyers?
Well, I hear for first-time home buyers, it's an incredibly hard market out there. There's so many factors that are honestly working against the consumer. So we're just trying to provide that lowest rate and that experience to them. So, I mean, what I would recommend is talk to someone you trust early on. There's no harm in getting that advice early on. You want to come to Pine. We're not really pushy at all. Our sales staff are not commission based, so they won't do that to you. They're just going to give you good advice. Now, to say whether you should wait or you should go now, there's so many factors. Are you looking in downtown Toronto? Are you looking in Sudbury? Are you in Niagara? I say these cities because we're primarily in Ontario right now, but it's your personal situation and it's your needs. So I don't think I can make a call on if you should wait, if you should sit on the sidelines. It's interesting, right? Because things are playing in a number of different directions. On one hand, you have interest rates continue to go up and both fixed and variable rates going up, meaning affordability is harder. Stress testing, so qualifying customers at a 2+ consumer rate, interest rate, is getting harder and harder. But home prices are declining just a little bit to offset some of that. And when home prices decline, even though the interest rates have gone up, so your mortgage payment might still look the same because they offset each other, there are other benefits. So, land transfer tax will go down and a few different things will change for that borrower. But really, it's your personal situation. I would say if it fits your family needs, if it fits your personal needs, go for it. But if you're in a situation, I rent because that fits my needs. I actually, I run this mortgage company. I still rent because that is a situation that is best for me. But for a lot of people, they want to take advantage of those capital gains exemptions. They want to find their primary residence. They want to be really happy and move into a house that they're going to see for many years. So it all comes down to them. I wish I could give, more specific advice, but you really have to understand that person's personal situation and look into it.
So would first-time home buyers be able to reach out to Pine even though they're thinking of, again, I know the answer, but I still want my listeners to know, even if they're thinking of like getting into the market 6 months from now, maybe they need a pre-approval or they just need somebody to talk to. How does kind of Pine take care of that? Can they reach out and kind of start that dialogue right now?
Yeah, 100%. So like all mortgage lenders, or not all, but like most mortgage lenders, will typically give you a rate lock for 120 days. That's what we do. Yeah. But that does not mean that you only have to come to us when you're 120 days out. If you're saying, hey, I just want to know what my affordability is, how much do you think with my financial background I could afford and what's reasonable, we can let you know, as soon as you come through. That's like, that we can turn around in less than a day. That's super easy. Now, when you find your property, it's important to come to us, make sure it's in something that we can underwrite to, because some things that we can't do, like very small towns, are not in our capacity to lend to. because we do have prudence. But yeah, 6 months out, more than happy. Come to us. We're not pushy. We're not trying to sell you something. And then when you are closer to that closing date, or you found your dream property, or maybe I say dream property, but you found a property that you're happy with and that you feel like a place where you can lay roots, yeah, we'll be more than happy to assist you then as well.
So where do you think, speaking of interest rates, where do you think they're going? Do you feel like we have more hikes coming along? Do you feel like we're at the end of them? What's your kind of judgment on where the Bank of Canada is going?
Yeah. So while we don't make like forward-looking statements on like where actual interest rates will be, I think that it's really important to follow the news and follow the economy. One thing, we saw a very high core CPI number from the United States, and that scared the market in the past couple of weeks. Everyone thought, oh, great. We had one good month of CPI not being as bad as it possibly could have been, inflation, and people start to cool off. But then they got one more bad number, and the market just went the opposite way, and bond yields spiked. And for people who don't know, mortgage interest rates follow the bond market. So if interest rates in the bond market are going up, that means your mortgage interest rate's most likely going to go up too. So yeah, there's probably a lot of room to still go up, unfortunately. But at the end of every cycle, there is a down. So I would say continue watching. And the one interesting thing that really surprises me, but maybe it shouldn't because I have been following financial markets for a while, is today's inflation numbers are not reflective of the interest rate hikes that have been put in by the Federal Reserve or the Bank of Canada. Those effects have not yet reached the kind of outskirts of the economy. So even though we're still seeing bad numbers today, those bad numbers were baked in months ago, right? Supply chains take months to work through. So people should not be super scared of numbers they're seeing today. We only started hiking rates recently. Let's see what the effects of those rate hikes are on the economy over the next year. And then, if it's bringing down inflation the way that they really hope. But the market tends to be very short-sighted and not really think of these consequences. But I believe that the central bankers do understand that, a bad August print doesn't really mean anything given that we only started hiking recently.
Yeah. And I think that's what, I feel like what people, and it's, everybody's not in a finance guy like yourself who's kind of in the market, but it's like a lot of this inflation is actually coming from like COVID when everybody's not working, they're getting paid. So you got money, but not enough goods. And now it's like, it's exponential. The effect is acute, but you're seeing it 2 years or a year after everything's been done. And so now, like you said, you're going to see that effect of the interest rates kind of slowly come in, but it's not going to happen like that. So there's a difference. Now I want to wrap this podcast up with one question I ask everyone. What do you recommend, variable or fixed?
Again, this totally depends on the borrower situation. If you like the stability of knowing exactly what your payment's going to be every month.
Hold on. So how about this? I'll reword it. What would you, if you're buying a house today, hypothetically, if you're buying a house today, would you lean towards variable or fixed yourself?
For me personally, even though I'm a startup guy and I'm kind of, I'm seen as a risk taker, I'm actually really not. I generally lean personally towards fixed products. And now they're a lot tighter, right? Yeah. So they are high. So I would say the number one thing I would say is I would look at, what am I doing with this property? Is this a place I'm going to, because there's actually a really, really easy way to look at this for a lot of people. Are you going to be in this property for at least 5 years? If you are, okay, then there's a lot of benefits of fixed. If you think, oh, I'm transient, I'm going to be here, I might move, variable, because the penalties are significantly less to break a variable than it are in fixed. So that's a very, very easy decision. If you have that, if you know that in your head, that helps inform you. You go in there. But for me, I do like the stability of a fixed rate.
Yeah, no, that's awesome. Thank you for coming on the podcast. Again, if our listeners want to reach out to Pine, I'm going to have their contact information below or on the side. Any last words, Justin?
No, thank you for having me. It's been great to be here.
Awesome. Thank you for coming on.